Thank you, and thank you for the opportunity to be able to speak and present today. We're talking here about Moneta Gold. We're a TSX main board listed company. We're based in Toronto. Our focus is gold, and it's gold in the Timmins camp, and we've put together what is currently the largest undeveloped gold project in North America. I do point out there are forward-looking statements in this presentation. The Tower Gold project occurs in the Timmins area. Timmins is a Tier 1 location, significant infrastructure there for mining companies, significant amount of current production, operating mills. Many of the majors are there, Newmont, Agnico Eagle, Pan American Silver, major city with a highly skilled workforce. And of course, Ontario is a very safe and friendly mining jurisdiction and a good place to be developing resources. Our current resource inventory, and this is hot off the press just over the last 2 weeks, it's 4.3 million ounces indicated, 7.5 million ounces inferred. This occurs as both high-grade underground resources and bulk tonnage resources, immediately adjacent to a major highway in the Timmins camp, 100 kilometres east of Timmins. We control now 17 kilometres of the major structural corridor there, the Desta-Porcupine Fault Zone. We've really only drilled out 9 kilometres of it. We have another 8 kilometres to go. And we do have a pipeline of other projects. We have other significant gold projects where high-grade gold has been mined historically, and there is historical high-grade drill results which we are following up. We've just put the resource out. We are now in the process of updating a consolidated PEA. We'll have that out over the next 2 months. We have already commenced our infill drill program. It's a 70,000 metre drill program. That's looking at upgrading inferred resources to indicated. We've got over 30,000 metres of that completed, and those results will be due to come out in the near term. And we also have a minor amount of exploration drilling. We are targeting some of the rest of the 17 kilometres, and we'll show some resource upside there in the coming weeks as well. The project itself, Timmins, is about 600 kilometres due north of Toronto. Great roads, rail. They've just announced passenger rail service into Timmins to recommence. We own 100% of our assets. Most of our land is patented mining claims, means we own both the surface rights, the underlying mineral rights. No royalties on about 80% of the resources. That's the Golden Highway area, and about a 1.5% royalty on the Garrison area, of which we can acquire back about 0.5%. So we see this as low capex, low operating costs. It has been shown in recent PEAs done in 2020, and we see this as a low carbon footprint project. As mentioned, significant exploration upside. We will be putting some of those results out here in the near future. Good clean metallurgy, clean tails, no acid generation, no deleterious elements. We put results out on the new discoveries earlier this year, and they confirmed the previous resource areas, so good recovery, no fine grind required, good response to gravity, and low reagent consumption and quick retention time. So again, pointing at low capital and operating costs. The PEA itself, we're looking at a number of mine to mill analysis studies. We have multiple options here in regards to sequencing high-grade underground, sequencing the pits. So we'll be looking at something in the 200 to 350,000 ounce per annum production. We're looking at keeping our capital costs down by bringing in high-grade early, stockpiling low-grade ore, thus reducing the size of the plant we require. Remember, we're in a great infrastructure-rich area, also significantly decreasing our capital cost requirements. And we're looking at potentially getting into the other underground early in Ontario, Canada. As you know, you can put declines in during exploration. You can access resources, fund it with flow-through, and thus have high-grade areas ready to go early. So this all translates into a major new gold project, which is going to show significant valuation. We have 95 million shares outstanding, not a lot of overhang with options or warrants. We're currently trading about 210 million market cap. Cash position of over 10 million. That's enough to take us through to the second quarter of next year. Good analyst coverage and significant ownership by many of the large gold funds in North America have continued to support us and continued to both grow their positions through raises and in the market. We're building up our project delivery team. We have 2 key announcements over the next 2 weeks. It's good, strong board, very good, diverse and a lot of depth in the board. As mentioned, 100 kilometres east of Timmins on a major highway. We straddle the Desta-Porcupine Fault Zone. It's the major mineralising structure. We also have a major, over 9,000 hectare JV with Agnico Eagle. We are looking to rationalise that land position. And we have a number of other projects in the Timmins area as well, gold projects, nickel and copper projects, and we are looking at ways to monetize those. As a junior, we have one of the largest land positions in the camp, and we have a controlling position in the eastern part of the camp. And we've really put together what is a new gold camp. We're well on the way with our environmental baseline studies. By this time next year, we'll have the baseline data collected, and we'll be well on the way to putting together the report and preparing for permitting. We have an exploration agreement with the Wagashig First Nations. They've set up a task force. We're now in initial discussions for IBAs. That is all moving well. I should point out Wagashig already has 5 IBAs for operating mines in the camp, so this is not a new process for them. Significant amount of historical drilling here, over 800,000 metres of drilling, nearly 3,000 drill holes. This was an ordinary Krieger resource constrained to wireframes, so quite conservative. This totals up to the top, so this breakdown by deposit. The key takeaways here are that the southwest, a new open pit resource, Windjammer Central, a new open pit resource, and I do point out that is lower grade. You take that out. The head grade we're looking at is more in the 1 to 1.1 gram per tonne for the open pits. New open pit at Westaway and a new underground resource at Garcon. This is a maiden underground resource. The last 2.5 years, we've grown significantly, over 800% resource growth. We're now at 11.8 million ounces. We initially targeted just the high-grade underground. We have historical operations and mining in the Garcon open pit. We see this as our starter pit. There was good recovery there, good grades. We see Garrison has been our starter pit, 1.8 million ounces at about 1.1 gram per tonne, with it before stockpiling of low-grade ore. Then, of course, the 2 large open pits in the Golden Highway area and the 2 large underground resources. So 500,000 ounces at Westaway and over 1 million ounces at Southwest. Looking at the comparison of our new resource as of late last month, compared to the previous resource, over 300,000 ounces in the indicated and 3.1 in the inferred. We've really connected up the Windjammer South Pit with the southwest area, pushed through the Windjammer Central area into discovery, and at 55 we've extended the pit all the way into what was previously the Westaway open underground resource. And at Garrison, the three open pits combined with the new Garcon underground. Key takeaway here is that the grade has not decreased with the new resource, despite that large increase at Windjammer Central. We pull that out. Our average grade is in the 1 to 1.1 gram per tonne. We added over 800,000 ounces indicated, 3.5 million ounces inferred. And underground, we increased the grade. Remember, some of the underground resources got captured in the expanded Southwest and Westaway pits. Quick picture of those, the 2 main pits at Golden Highway, showing the underground resources wide open at Westaway, have significant potential to expand those, but we've already commenced, as mentioned, our infill drill program. And at our starter pit at Garrison, 1.8 million ounces at over 1 gram, low strip, outcropping, previously mined, 2 small open pits there already. Valuation-wise, we're trading at $13, $14 an ounce. There's significant upside for our investors. We've been growing resources quicker than the market can value us. Our share price has performed well, though. This puts us as the largest underdeveloped gold project in North America, with both high-grade and bulk tonnage underground deposits. As mentioned, the share price has performed well. We're up 5 times over the last 2 years, and we're looking to continue to that valuation, revaluation. And as mentioned, our key milestones over the next 2 years, PEA this year, infill drilling, exploration drilling, complete the PFS next year. We'll start that earlier this year, and then commence the feasibility study, by which time we'll have the EIA data collected, potentially be in a position to begin permitting. So on that note, thank you.